First of all, it seems to have dragged on too long than we expect. When you relate this to the kind of statements that had been made, at one time we were told it was coming in the first quarter. Now we are hopeful that before the end of the second quarter. Now we are looking at the third quarter. In itself, such major steps should not drag on for too long. If you look at the stimulus steps taken in the United States when they experience similar things, they have to be timely. That's number one. Number two, the gesture is very nice, and I think it's going to assist. Stimulus is essential. It has worked in other places. And by the way, the idea of the asset management company also happened in the US some decades ago. In fact, we also had the privilege of studying how it worked there. I was part of a Nigerian delegation. And we think it is desirable. Having said that, it brings in a lot of liquidity, but the management of those assets should be done very carefully. Incidentally, through NDIC, we have gained some experience in handling such assets, but we can do a little more, getting some specialists on this and being sincere, such that we are not getting people put in authority who don't have absolute transparency. But I believe that we should also have milestones. How quickly do we recover this? If we don't set targets for ourselves, then we have nothing to be able to gauge against our performance.
Let's get back to the issue of corporate governance in stabilizing the banks, the banking system and all that. The central bank had come up with quite a number of issues, a set tenure limit for bank CEOs and other executive and non-executive directors. The Securities and Exchange Commission is reading the same script in terms of a board membership, as it were, across companies that are PLCs, as it were, whether you're listed or not listed. These are issues that had been on ground, as you said earlier in the show, during the previous, the tenures of previous central bank chiefs, in terms of you can be the chairman and the chief executive officer of the same bank. You can have the father, 2, 3 sons, perhaps a mother-in-law and sister-in-laws or uncles and cousins and nieces on the same board of directors. Inefficiency, issue of lack of transparency of these directors. Give us your thinking on this new set of cleansing, as it were, or trying to regulate board membership in Nigeria. You're a member of companies that are also on the board of companies as well.
Very good idea. In the first instance, with banks, experience has shown over the years that depositors' funds constitutes very close to 80% of the total fund employed, of the total capital employed. It therefore means that it goes beyond the interest of saying, I'm a core shareholder, this and whatever. The interest of the banking, in fact, the entire investing public must be recognized. So the sanitization, the new guidelines, they are all essential. Secondly, corporate governance has proven to be the rescue way now. If it is just registration here or there, people have ways, of working through this. Having said that, we don't even need to wait till the central bank says this or that. Every board of every bank needs to be more responsible. The only aspect of the regulation I'm not too comfortable with, the idea of saying directors for 2 years. I think it is going too far. For a director in a bank or in any company, to be part, of the business plan, the long-term strategy, to be able to put in the best, let him go there and have peace of mind. Let him be able to say that, look, I can plan for so much period. I think... What's
your suggestion? How many?
Oh, 4 years.
Minimum of 4?
Yes, minimum 4. Which does not stop, the organization to drop a director if he falls foul of the law. It shouldn't be that, okay, because it is 2 years, I'm waiting to the end of 2 years. No. But if you know what it takes, even to become a director of a bank, a number of people today, you give them that offer, they reject it. And that is
yeah, of course, it doesn't look like a very enviable position these days anymore.
Maybe some 10 years ago, some people have tried to sell their properties in order to have substantial holding, in order to be on the board. Today, it isn't the same story, even around the globe. So, for somebody to accept...
so those of you who were bank directors in those days were enviable, were none of people envy you anymore.
But you are to know that landscape has changed. I mean, it's not the banking of the 70s, the 80s, or the 90s anymore. It's something different. I mean, I appreciate the effort. I appreciate the contributions of those who are. In actual fact, there is a greater demand on them. But what we need to do is control. Too often, we bestow excessive power on our chief executives. It shouldn't be so. It's like they can commit blue murder. It shouldn't be so.
Let's take in one very quick break. When we take the final lap of these discussions with you, we'll try to trash out one or two very important issues as well. Just stick around with us on the program. We've got a few moments to share with you on the program. Femi Ekundayo, a one-time president of the Institute of Bankers of Nigeria and the chairman of Resort Group, also a trading company, one of the companies listed on the Nigerian Stock Exchange. We'll be back after the break.
Between banks and the capital market in Nigeria in particular is very tight. Banking stocks make up over 67% of the stock exchange market capitalization, which is in fact a major risk to the stock exchange itself. As you know, in other parts of the world, the financial services account for 20-25% max. Now, when you've got one industry accounting for 70% of capitalization, then as they say, when the industry sneezes, the rest of the market catches a cold. Improved governance, disclosure, transparency, and asset quality are critical to the long-term growth and resilience of the capital markets. And we keep emphasizing this because people say these actions may shake confidence. In fact, these actions are the actions that will restore confidence. Because confidence is restored when you have transparency, when you have disclosure, when you have ethics, and when you have professionalism. The capital markets continue to play a major role in banking reform, and the actions we've taken have provided a platform for the restoration of confidence and are in the interest of the sustainability and growth of the capital markets. Our priority as central bank in all our actions, following our mandate naturally, will be to safeguard the interests of depositors and creditors. But having said that, all stakeholders, including shareholders, will be treated in a fair and transparent manner. The central bank will achieve its objectives by acting within the boundaries of the Nigerian laws. No action will be taken without having been reviewed and considered, without reviewing and considering all the options available. And we intend to reform the banking system in order to prevent a similar crisis from occurring in the future.
A special edition of Business Morning, Monday, the 31st of May. Let's get back to our guest in the studio, the final lap of the program, Femi Ekundayo, from our CIBN president and chairman of Resort Group. Thank you, sir. Let's finish up with what Lamido Sanusi was just saying, that right now the aggregate share of banks in the Nigerian stock market is now down about 48%. As at the time Lamido was speaking, with just about 70%, at a point almost 80%. In fact, among the top 20 most capitalized companies on the exchange, banks take about 80% of that. Things have since changed. Do you think we should keep it that way?
We should ask ourselves, what were the factors responsible for the change? If you look at the capital market performance in the last 6 months, the non-bank institutions did not drop in capitalization the way the banks did drop. And that's the major factor. Or is it that we have had new entries from non-bank sector? The answer is no. So are we to say, even in terms of activities on daily trading, the role of banks has dropped? So
should we keep it that way?
Do we need
because everyone has always complained. We complained during the boom years that there was a domineering influence of banks in the system, and that the engine of growth for every market is not with financial services. You find the price of a listed price of a bank 110,000 times the share of a company that gives better dividend at the end of the year.
We are saying the same thing. Maybe we are looking at this from different perspectives. You don't throw away the baby with the bathwater. I am happy that the industrial sector, the productive sectors are growing. In fact, I am more for saying let's give it the more impetus that those areas should grow, without which banking is meaningless. And that is the truth. But at the same time, we also recognize the role of banks as fueling those manufacturing, those productive sectors of the economy.
You think we were too aggressive in pricing those banks in previous years?
Oh, yes, we were. There's no doubt about that.
Those prices, you think, were just not too realistic as it were? Yes.
And it's because of the Nigerian psyche, our mentality, anything banking. You still recall those days when people were selling 4 out of their 5 houses, if not entire 5, in order to have substantial holding. You have seen people who knew very little about banking, who still chose to be chairmen and directors just for the prestige. Of course, you should have some expertise in that area before you sit on the board. So, on the balance, what I'm saying is, such things that can still make the banks to grow steadily, we should not ignore. We should actually support. Whilst we keep on making the non-bank sectors to have greater visibility, a better presence. Because at the end of it, what are we talking about? Things that grow the economy. Services alone don't. You're looking at services like tourism, they do more than banking. Because, yes, because tourism will provide employment here and there, wider, and it provides jobs, ancillary jobs for people who come into this and whatever. And we overemphasize that in banking. But banking should still be preserved. We should allow the growth to be steady, not too rapid.
Let's take the final one from you on the program. We thank you very much for being here. The central bank's 500 billion naira bailout package, as it were, being extended, because the central bank started with the rescued banks as it takes 620 billion naira, as it were, so the banks can stay alive, and the NDIC will have no problem scratching his head how to resolve those depositors' funds. So that's on one side. Then the second phase, as it were, right now, is that, well, the real sector, the power sector, energy to be more precise, is getting some funds. The Bank of Industry, working with the central bank, is trying to restructure some of the credits that the manufacturers took in previous years that are tied down, and now it's been extended over the last 24 hours to the aviation industry. That was the news that came overnight over this public holiday. So give us a sense of how do you think this will further unlock the economic lockdown that we've had over the past few years, in which Lamido came in last year as having an unenviable position of being the one to balance both fiscal issues alongside monetary.
When you are in a situation like this, the right thing to do, look at people who had been in similar situations and see how they got out of this. I keep on giving kudos to Obama, not just because an African American, but because the worth is there, justifying his position. By the time he became president, even prior to that, you will see that he identified those problems affecting the entire American economy. The soft spot that he had for automobile was the fact that he realized that that used to be a hallmark. Okay, similarly, even as at the time he was coming in, we had 2 wars on hand. And what was everybody's challenge was, look, this man is coming when America was fighting 2 wars. Who is talking about those wars today? Yes, he shifted attention to those things that will make America to grow. Now, having said this, I commend the president's move Today, I mean, yesterday it was the sick banks. Now we're talking about the 500 billion. We're talking about the airline. I think that is the way to go. The central bank governor helps the development of every nation's economy. One area which we haven't mentioned because of this interview is the microfinance banking, and which is very important. Unless we grow those micro and low income, whatever, we aren't going to have a balanced economy. You take a place like India, the Tata of this world were able to become a giant in the automobile industry, buy the biggest automobile company in the UK. Yes, because of the support that arose from the micro, small and medium scale industries. All those boats, this and whatever, are not manufactured by Tata, but there were other smaller people that put little bits and, bits and pieces together.
So you think Lamido should move very rapidly?
Yes, but
to
to look at microfinance, and they're already working, because as we speak today, there are efforts in capacity building for the microfinance banks. But even the nation itself should see it as a very germane effort. It is not a sector to be ignored. In fact, it's also a sector that should be patronized, but it must be monitored. It must be given all the support that it requires. And let us look at banking generally. Attune this to the needs of our people. A large percentage of our population are in the rural areas. They are the low-income people, even within Lagos. So this should touch lives at every level. Finally, we should encourage banking culture. Let people imbibe banking culture, because banking is important. We are going to business. Every business must have a bank account, so that you can, put into it what is business aside from what is personal. I think that way the economy will grow.
Thank you very much for being part of this program. We really appreciate your presence here despite the public holiday. This is the first installment. And of course, we hope you'll be back within the next 2 weeks, which we will do this on the program. We thank you very much, Femi Ekundayo, the chairman of Resort Group and one of the one-time president of the Chartered Institute of Bankers of Nigeria. The discussion continues. Lamido, 1 year of a bull run. It's NBC's special here on Business Morning as well as online. Join the debate, as it were. You've got any comment or question of your own, put it on our email address, businessmorning@channelstv.com. And if you're online, check it, some of these stories and feature articles on www.marketnewstv.com. It's a 2-week special feature here on the program. Lamido will be 1 year in office on Friday this week, the 5th of June. So please keep your eyes on that very important event.